So good morning, everyone. This is
Right.
Mansik from BRAC Bank. Is the screen visible?
It's loading. Yes.
Okay. So apologies for the technical difficulties. Let me just introduce our team here. So what we propose from BRAC Bank, a brief introduction of BRAC Bank would do very well at first. So BRAC Bank is a strong SME corporate and retail focused bank. We are a bank which is majority owned by the world's number one NGO, which is BRAC, which sort of drives our mission and purpose. So, as part of the BRAC family, our proposition here is to offer a sustainable resource financing solution, by which we mean is that we would like to connect our strength in both retail and in SME lending together to make a financing solution that works as a bank as well as for our customers. So let me just introduce our team here. So I am Mansib. As Ami and Mohit, we work in our SME team. We also have our Turna Appa, who works in our retail team. So this is a good situation where the UNGC team brought us together, allowed us to break the silo that happens across all large organizations, and made us overall a better team overall. And we are glad to have Turnapa and Mohit with us. And I think Turnapa will start with the background of the problem that we're solving. So Turnapa, can you hear us? Hello.
Yes, we can hear you.
Okay. So Turnapa, can you hear us? Okay. So let me just go through the presentation. No worries. So technical difficulties are part and parcel of the problem, but the more important problem that we're trying to solve here is our banking value chain. So this is what BRAC Bank does. We finance both large corporates, we finance small businesses, and we finance individuals. So we were trying to figure out how, as a bank, within the boundaries of banking in Bangladesh, a very traditional banking segment, a perspective whereby we haven't yet managed to digitalize our financial sector yet. How do we use our strengths in having the largest network in terms of both SME lending and retail lending? How do we use our large workforce? And more importantly, how do we use our uh, very strong strength in providing 360 business solutions together so as to make this thing work? So, our solution was basically this. So, one of the biggest problems that we see in Bangladesh is not just in terms of access to sustainable financing, but in terms of financing overall. As we have told you that since Bangladesh is unfortunately not digitalized yet, in the sense that it still has a very analog market, we think that we could be the missing link between both consumers and SME businesses who are working in this field. So, what is the issue here? The issue is that what we have seen is that while we are aligned with our SDG goals and we are among the top banks who are working to finance sustainable in the sustainable financing industry, what we lack is an access to credit from both the retail perspective. Our retail customers do not have access to specialized credit focusing on, say, solar panels. At the same time, the SMEs that we work with do not obviously have dedicated sustainable financing solutions. So, for example, they might have access to term loans, but they might not have access to specialized, cheaper, more long-term sustainable financing solutions, such as, for example, project financing. So the way this works is that, so why, if you see our disbursement volume, you will see that while we do have a large, in terms of Bangladesh Taka, portfolio of nearly 10 billion that is linked to sustainability. However, what we think is that is clearly not enough, because our financing solutions right now is primarily geared towards our corporate clients. So Bangladesh is primarily focused on an export-oriented RMG economy, and as you know, that RMG or ready-made garments is a very corporate-focused sector. So while we do have an extensive financing towards our corporate sector, to our corporate clients, we do not have necessarily a strong focus on financing retail businesses or SME businesses who are working in this field. So we think that we could be the missing link here. And we think that one of the biggest reasons why sustainable financing in Bangladesh is not built from the ground up is because of two things. First is that the organizations working in this sector are primarily NGOs or microfinance institutions with very large or significantly large rates of capital. That is, their interest rates are usually higher. Second is that they do not have a large enough distribution network to make this thing work. So we were thinking, since we do have a large agenda towards financing, towards sustainable financing, and we know that corporate financing is our bread and butter currently. We were thinking, how do we expand that into a retail and SME business? And the way we think that this works is that we have one of the largest group of SME borrowers in the country. That is nearly 130,000 SME borrowers and a retail base of 50,000. So that amounts to, say, for example, to give a perspective, nearly 20 to 30% of the current active market that we can perceive. However, what we have seen is that from our regular surveys with our SME customers during the COVID-19 period, is that they do have an extensive interest in availing green financing, but they simply don't know how they can do that. So we think that this is a blue ocean for us. We think that this is somewhere where we can do fantastically well. Second is that the way BRAC Bank finances customers is significantly different from how corporate borrower or other banks in the industry works. We focused on uncollateralized or non-collateral based lending, by which we mean that when we finance a customer, we do not ask for the customer's land, we do not ask for the customer's existing fixed assets. What we ask is the customers whether the customer's cash flow is sustainable or not. So this works across both our SME and retail channels. So when we do this kind of financing, since we do have a specialized market knowledge that is geared towards finding out the right set of customers, we think that this is a good segment for us. Thereby, we can not just increase our own portfolio, but we can also focus on building a strong sustainable financing network across the country.
1 minute left.
Yeah. Okay. So what we think is the value proposition is this. We will have a financing proposition which allows biogas plants, solar panels, sanitary plants, as well as similar finance to get bundle propositions. That is, their customers will get the loan, an SME business, as well as the customers downstream. That is, the customers will also get the loan for this. So what we think is that the best way for this is we will not offer direct cash, but we will offer credit. We will offer a grace period as well. And more importantly, these loans will be subsidized because we think that this is a strong or fundamental part of our portfolio. And the way we think is that we will also offer a bundle credit card for our customers who are working with this. So a credit card, for example, is usually associated with higher charges. For these customers, the annual fee will be waived so that they can get this credit card and buy specialized products. So specifically for example, wash, specifically for biogas, and so on. So this is our breakthrough process. I think, Mohit, if you would like to carry on from there.
Yes, thank you so much, team. We have to stick to the agenda and we have very limited time left. So I will take one question since we have only 4 minutes left from one of the judges. So perhaps this question can tackle something that was not featured in the presentation. So Kim, Nadim, Manda, who would like to ask this question to our team from BRAC Bank? Manda.
So I do have a bit of an understanding in the banking space. So I thought, Kim, I'll take this one. So you're saying you do not take collateral on the loans. So what kind of security do you then have? Because I mean, banking is all about risk mitigation, and without security, how do you secure the loan?
Okay, that's a great question. So the way this works is that we do not take collateral because we don't think collateral is an effective form of security. What we do is we check out the customer's cash flow, whether that makes sense. So, for example, if I go to a customer, if I see that the customer does not have sufficient amount of assets to back up their debt equity ratio, we focus on the debt burden ratio. That is whether the customer is able to pay on the EMIs or the EQ quarterly interest on time or not. So by focusing on the quarterly part or the cash flow part of the credit cycle, rather than focusing on the asset part of the cycle, what we do is two things. First is that we follow up with intense monitoring on a monthly basis, on a quarterly basis. Second is that we allow our primary focus in being a missing link to downstream or smaller ticket customers who necessarily do not have enough assets in their disposal. So by focusing on CMSME, that is cottage and micro businesses in particular, and focusing on a very intense model of cash repayment, we ensure that this customer gets back the credit on due time.
Fair enough, I guess. Thank you, team. Don't forget that you can interact using the chat function. You can chat with our audience. Our audience can ask questions, send feedback, comments,